takes blank to make money. What is money? Ding, ding, ding. That's correct. We would have also accepted capital. What is capital? And if you stick around till the end, I'll show you a way to get extra capital even if you don't have a lot yourself. First, let's talk about the difference between capital and money. In economics, money is a container and measure of value. In English, that just means money is something we use to measure value and to make trade easier. But capital is anything you can buy, hire, or use that is then used to make something else that you can then sell. For example, let's say I own a t-shirt printing company. The machine I buy to print the t-shirts is capital because it's a tool I use to make the t-shirts to sell to consumers. And if I was a handyman, my tools would be my capital. And if I was an artist, it'd be my canvases, my paint, my brushes. And in all three cases, there's also the technical creativity and skills that goes into making those items that cost me time to learn. But in the end, money was used, even if indirectly, to buy those tools and skills. So for all intents and purposes, capital equals money, even if not 100% accurate. And this is important when it comes to borrowing money, because lenders are more likely to lend money to borrowers who put in their own capital. It demonstrates that the borrower isn't likely to dump everything and bail because they've already got so much invested in whatever they're looking to use the loan for. It's a demonstration of commitment. It means if you don't repay the lender, you're willing to take a loss yourself. It means you have skin in the game, which is why it hurts when you have to make a down payment. And while many institutional lenders are rigid in what they'll accept in terms of capital, cash, from private banks to the government-run FHA, each differ in the exact amount of cash necessary to show that commitment. There are also many private lenders, such as hard money lenders, family members, seller financiers, or land contractors, that are willing to accept other forms of commitment. What you have to understand about getting approved for a loan is that it's like playing an RPG. Some characters have high magic skills, but low speed, and others are really strong but lack intelligence. It's almost impossible to find a character that's maxed out on everything. But regardless of which character you choose, given their unique strengths and weaknesses, it is still possible to complete the game. It's just that the path to victory looks very different for each character, even if it means they have to partner with different people in order to strengthen where they are weak. In terms of getting a loan, you may have a low credit score or a high debt-to-income ratio, but if you can show you're willing to put enough skin in the game with the right conditions, you can still get approved, even if it means partnering with non-traditional lenders. The thing you have to remember is that lenders only make money when they actually let you borrow their money. They want you to borrow their money, they're just looking to limit their losses. And one of the ways money or capital does this is by limiting the amount they have to lend to you. So if you want to buy a house that costs $1 million and you put in $100,000, that means the bank has to lend you $900,000. On the other hand, if you want to buy that same house for $1 million, but you put in $500K, the bank only has to lend you $500K. By putting in more of your own capital, you're taking on more risk and taking it off of them, especially if you don't have any other way of demonstrating that you're low risk. Yes, it takes money to make money. And if you are low on credit history or other important approval metrics, you can compensate by putting in more of your own money.
However, 10% on $1 million loan is a lot more than 25% on a $100,000 loan, which is a lot more than 50% on a $10,000 loan.
This is how many down payment assistance programs, second mortgages, and seller financing or land contracts work. In essence, you borrow the capital necessary for a down payment from another lender. So while it takes money to make money, that's not the same as saying it takes a lot of money to get started.